Hello, our beloved learners. It is teacher Shoppi Eria from Muna Education Services. I welcome you all to our lesson. I advise learners who haven't watched our previous video. I discussed single column cash books, the format and the details about it. So in this lesson, I'm going to work out an example. I worked out example on how to prepare a single column cash book. It is preparation of a single column cash book. We have an activity here, so I'm going to read out this example and then work it out or show you how I worked it out. Okay, the activity goes: the following transactions are from Triscus Bakery for the month of December 2025. On first, started business with cash UGX 800,000. On second, bought wheat with cash UGX 200,000. Then on fifth, bought a mixing machine with cash UGX 300,000. Then on sixth, sold goods for cash UGX 150,000. Then on 10th, cash sales were UGX 500,000. On 12th, received bank loan UGX 100,000. Then on 18th, paid rent by cash 120,000. Then lastly, 29th, sold bread and received cash UGX 80,000. So our question is: required, record the above transactions in a single column cash book. So this is our question, and I'm going to be showing you how to prepare a single column cash book from these transactions. So we have these transactions. Some of them are date and some of them are on the credit side. So I'm going to be showing you how we post them or how we prepare a single column cash book from these transactions. This is our question, and I'm going to be sharing with you how to prepare a single column cash book from it. Okay. Example on the preparation of a single column cash book. This is our worked out example on the preparation of a single column cash book. Remember, we said that when preparing any account or any financial statement, we always write the title on 3 lines. So in our question, the question was: required is prepare the above transactions in a single column cash book for Triscus, but the business was for Triscus Bakery for the month of December. So our heading becomes Triscus's single column cash book for the month of December 2025. You write the title on 3 lines. The first line is for the business name or the owner of the business. So in this regard is Triscus. Then second name is single column cash book. Then the third is for the name, the period or the time. It is for the month of December 2025. So this is our worked out example on that. Okay, so in our question, I'm going to be reading one transaction and then we post it. So our first transaction was: on first, started business with cash UGX 800,000. So if you start business with cash UGX 800,000, meaning that cash it is our capital. So capital is meaning the business is receiving cash from the capital account, so it is gaining money to start the business. So we said that in a single column cash book, transactions that bring in money into the business are recorded on the date side, meaning started business with cash UGX 800,000 is going to be recorded on the date side of the single column cash book, like you see it here. So our transaction was on first. It is on first. Capital started with capital, meaning cash, the money used to start a business is called capital. So it is first. Our details becomes capital. Let's name it as folio number 1, and the amount was 800. So you post this and you record it at first capital. The folio number is 01 and then in the amount UGX was 800,000. That was raw money. That is raw money 1. That is on first. So we are done recording. We are dealing in a single entry system, and we post the transaction once. So it is first, and we are done posting it. Okay, then on second, they said on second, bought wheat with cash, UGX 200,000. Bought wheat with cash, UGX 200,000. Remember, we are tracking debt and credit. So if a business buys wheat with cash, meaning it made a purchase. So we say that if you buy, meaning you're going to lose out money, or you're going to spend money, meaning the business is losing money. So on second, if they bought wheat UGX 200,000, meaning the business spent the 200,000. Meaning on second, we are going to record this transaction on the credit side because it is a purchase, as in the business was losing money. So it is second, our details becomes purchases. Let's give it as folio number 02, and the amount was 200. That is 200. So we are done recording second. So let's come on 5th. On 5th, bought a mixing machine. Cash UGX 300,000. It is also a purchase. If you buy a mixing machine, meaning you're going to receive the mixing machine, but you're going to lose out the money, which is 300,000. Meaning here the business lost the 300,000 to gain the mixing machine. So 5th is so we post this on the credit side of the single column cash book because it is a purchase. So we record here, we record it like this. So 5th, you come and record it here. 5th in under the date column on the credit side. 5th purchase in the details column, and then let's give it as folio number 03, and the amount was 300. Remember, this is a purchase, and the business was spending money out of the business. So we record it on the credit side as in the left hand side of the cash book. We are done recording 5th. Let's go to 6th. So it is on 6th, sold goods for cash, UGX 150,000. So if a business sells goods off and receives cash 150,000, meaning that it is receiving money from what it has sold. Meaning we record this transaction on 6th is a date transaction, meaning the business received money from what it sold. So you just come and record it in the date side because the business is receiving money. So you come and record it here on the date side of the cash, or the date side on the cash book. So we said on 6th it was a cash sale. So we say 6th cash sales. Let's give it a folio number 04, and the amount was 50,000. We are recording it on the date side because it was a cash sale. The business was receiving money. Let's go to the next Roman. It is on 10th. We're done with 6th. Let's go on 10th. On 10th, cash sales UGX 500,000, meaning they were cash sales, meaning if you sell, you receive the cash from what it sold. So it is a date transaction, meaning here the business was receiving money. So we're going to record 10th cash sales UGX 500,000 on the date side in the cash book. So 10th cash sales, let's give it folio number 05. The amount is 500. We're done recording that because it is a date, but the business was receiving money. We're done with 10th. Let's go on 12th. The 12th is received bank loan UGX 100,000. If you receive a bank loan, meaning you're receiving money, so we record that on the date side in the cash book or in the single column cash book. So it was on 12th. It was, the details is bank loan. For the number we give it 06, and the amount was 100,000. So that is, we're done with 12. So let's go to our second last transaction. It was on 18th. They said paid rent by cash UGX 120,000. Paid rent by cash UGX 120,000. So if you pay rent by cash, meaning you're losing out the cash. So the business is losing out on payment of rent, and the amount was 150,000. Meaning 18th was a credit transaction because the business was losing out money for payment of rent for the business. So we recorded the 18th transaction on the credit side of the cash book. So it is 18th 18. Paid rent, let's give it folio number 07, as the amount is 120,000 because it is a credit transaction. Let's go to our very last transaction. It was on 29th. They said on 29th. Sold bread and received cash UGX 80,000. So the business sold the bread because it was a bakery. So Triska sold bread and received the cash UGX to 80,000. So this is a date transaction because the business was receiving cash from the bread it sold. So we record this on the date side, on the date side. So 29th is going to record it on the date side as you see here. So we record 29th cash sales. Let's give it folio number 08 and it is 80,000. So we're done recording all our transactions. We are left with none. So we are just going to go and balance it out. We are done recording these transactions. They are all recorded. So our question was record the above transactions in a single column cash book. Record the above transactions in a single column cash book. So we are done recording. So we are only left with balancing them out. So this is our recorded. These are our recorded transactions. So we want to balance them out. Now in the balancing part, I'm going to show you it here how to balance. So when you're balancing a single column cash book, we add the totals separately in the date column on the date side and the amount column in the credit side. We add these totals separately in the amount column on the date side and separately in the amount column on the credit side. So we had 80,000. It is 800,000 plus 150 plus 500,000 plus 100,000 plus 80,000. Get the total and put it somewhere. Then get this total also. It is 200,000 plus 700,000 plus 120,000. Get the total and put it somewhere. So we do it like this. When you're balancing, we add these totals. Now the side that has a bigger total, we less the total from the side that has a smaller total. So our total here was 1,630,000, and here the total was 1 million. It was 1 million. No, it was 620,000. So we reduce the smallest total with the biggest total, and what we get is what we call balance carried down. So if you less the total from the bigger side, from the total you got from the lesser side, you get this as the balance. So we bring that balance. That balance is named as balance carried down. So it is recorded on or posted on the side that had a less total. We add this total and these totals and get the totals very well, and then subtract the smaller total from the bigger total and get the difference. Now the difference is recorded on the smaller side of the account, as in this was the smaller side. So if you reduce this from 620, you get 1,710,000. The total of this and this and this is 620,000. So you get the 620,000 minus the totals here. You less it from 1,630,000. You get the balance as 1,010,000. So 1,010,000 becomes the balance carried down and is always recorded on that side that had the smallest total here. So we record it here as balance carried down. Then you add up these totals very well. So we add up these totals and get this. So this difference, this total, or this difference you've gotten, or this answer you've gotten after subtracting the side that had a bigger total from the side that has a smaller total, is carried in the next month. Remember, we were dealing, this was December. So we carry this balance carried down and record it here on the opposite side of the account as on 1st January 2026, because this was December, the month was ending, the year was ending. So this balance carried down is brought down in the next month, which is 1st January 2026, since this was December 2025. That is how we balance and prepare a single column cash book. That is how we balance and prepare a single column cash book. Thank you so much for listening and viewing. In my next episode, I'm going to be discussing the balancing part, how we balance cash books very well. So I just advise you, our dear learners, to go and download our material on Una Education Services, and also watch our videos and good materials on all social media platforms. I'm teacher Shoppi Eria from Una Education Services. Thank you for listening.